In this video, I want to talk about type-subtype associations. Okay, people refer to these as different things. I personally have referred to these as different things. Here's an inventory of those things. So I've now standardized on type-subtype associations because that is what OMG's Standard Business Report model is doing. Others refer to this as anchoring or wider, narrower relations, or I use the term class-subclass relations, which I think was incorrect, but close. Another term is general-special relations, which is defined by XBRL International. Another term is a relation, but it's basically it's a type of something and specifying that something else is a subtype, or you can have a supertype relation by basically going the opposite direction, but you can still use the type, subtype, or general special relation. But anyway, here's what's going on. So imagine that you had the notion of something called property, plant, and equipment, and you created a taxonomy for this. You put in land, buildings, equipment, furniture, and fixtures. Okay? So, what if everybody had to use these terms? Okay, that wouldn't work. So, let me explain why it won't work, and let me explain what a type and a subtype is. So basically, the general concept, property, plant, and equipment, is specialized by these subconcepts. Land is a specialization of the more general concept, property, plant, and equipment. Buildings is a specialization. Also, it's different than land. Equipment is the same thing. So anyways, you get the general idea of what a general special relationship is. And these tend to be shown as hierarchies, but there's nothing magical about having it in a hierarchy. It just helps communicate what's going on. So imagine that somebody else wanted to create a new category of property, plant, and equipment. So if they simply created a concept called planes and then used it on a fact that they report, the data aggregators or regulators or analysts that are going to consume the information won't really know what to do with that concept. They could have some clues based on other associations like calculation relations and other stuff. But if you look at it another way, if they were just specific and said you created a relationship when you created the taxonomy, which you have to do anyway, and you just state explicitly that planes is a generalization or is a specialization of the more general concept, property, plant, and equipment. And you do that for all of the extensions that you create. Planes, trains, and automobiles. You could also do it for, I was showing here the lower level, putting things, adding things to the list. But you can also take and reorganize the list at any level using these ideas. You could create another concept called property, plant, and equipment plus intangible assets, and then combined intangible assets and property, plant, and equipment. But anyway, it's very flexible, and it's necessary to lead the dumb beasts, the computers, to do the right thing for us users, that we get this stuff, but they don't, so we have to communicate that to them. That's all that these type, subtype, or general special relations do. So here's an example. Look at economic entity A on the left and economic entity B on the right. So they're both trying to articulate the roll-up for property, plant, and equipment. So The last three concepts are the same. You have property, plant, and equipment net, accumulated depreciation, and property, plant, and equipment gross. But these line items are all different. These guys have used the ones that were specified in my list above. These guys have combined land and buildings. They've broken out equipment into two pieces. And this is what the wider, narrower, or general, special, or is-a relationships do. So another reason for this is here. Yeah, so imagine 7,000 companies moving taxonomy links around and associations around and trying to represent a very complex report and get it right every time. Imagine that. So here, this is actually an example of the general problem that happens. So economic entity A, economic entity B. Here you see these two line items. Additional long-term borrowings, repayment of long-term borrowing. Just ignore the two. And here you see the same two line items. But what economic entity A did is use those two line items to describe net cash flow from financing activities, and economic entity B used it to describe net cash flow from investing activities. So they did the same thing for this line item. They basically reversed these two sets of line items. So what these type-subtype relations do is they allow for software to be written that makes sure that accountants creating these reports use these line items as they're supposed to be used. And this is just one example of doing it incorrectly. So today in the US GAAP and IFRS taxonomy, that information does not exist. Yet the rules exist for both the SEC and ESMA that say use the wider or the narrowest concept. So how does that work? Well, it's not working. So there are known issues, and you give 10 people the same task of finding what is the widest or what is the narrowest concept, and you'll get 10 different answers because it's not clear in the US GAAP or IFRS taxonomy. So here's an example. Gross revenues is not a wider or narrower concept than gross profit. Okay, it's a different concept. Revenues it's used in a calculation to compute gross profit, but it's not wider or narrower than gross profit. Same with cost of revenues. So there are some calculation relations that work in the same way that wider or narrower work, but they're not perfect. Okay, the same thing for the presentation relations. Presentation relations are they're worse. So here you basically have nothing more than parent-child relations, and this is just a grab bag of different stuff that the FASB represented one way, the IFRS Foundation represented similarly, but not exactly the same way, and they're not explicit, and it's just a convoluted mess. But what if you took and clearly specified using XBRL definition relations, which you can do, and you use the existing general special relationship, or you could use wider or narrower, or someone could create another more perfectly defined relation type, and then you created this very clear hierarchy that humans can read. Humans can read this, but computers can also read this. These are not parent-child relations. This is a special term. And so these are very explicit. And this is for a prototype small taxonomy. You can do the same thing for, I worked with someone else, and they did this for the IFRS taxonomy. But this is what is necessary. You want to have this explicitly spelled out for computers because they're dumb and that's what they need. So there's another thing that's kind of related to this that I want to throw in here is equivalence associations. So in the US GAAP taxonomy, there are concepts that are virtually equivalent to another concept. So for example, net income loss, which is actually net income loss attributable to parent. Well, this is income loss attributable to parent. So what the heck's the difference? So this concept is for partnerships, and this one is for corporations. So in my view, it's wrong to have both of these concepts. It's less wrong if you have both of the concepts, but you put an equivalence relationship in the taxonomy, so you let people know that they're equivalent concepts. The same thing can be used to, this isn't exactly true, but it communicates an idea. So here you have the US GAAP profit loss and IFRS profit loss, and you are specifying that these are equivalent concepts in some context. So this is not necessarily the case, and IFRS rules are different than US GAAP rules, but for some use cases, this would be very useful. But the whole notion here that I'm trying to communicate is the notion that equivalence associations are also important, and these are just examples trying to communicate that message. So I'm going to stop there. Call that good.